We start off with a blockbuster week for Netflix. The streaming stock seeming unstoppable. Netflix shares are up 15 of the last 16 trading sessions, and the chartmaster says this record rally is just getting started. Let's get to Cornerstone Macro's Carter Braxton Worth to lay it all out. Hey, Carter.
Right. Well, so if you think about it, obviously the last many days have been very positive, and yet the stock has made no progress in essentially a year. So those are two things that juxtaposed against one another almost make no sense. A sort of a multi-day rally, and yet you've made no progress in a year. Let's look at the charts. Before we get to Netflix, I'm going to do a little before and after. And so you see it often for diet ads, the before and after, or weather decking. Here's the pre-deck, and then here it is after. We're going to do that right now. Look at Nvidia. Look at the setup. A big move, a triple off the low, 50 to 150. It rests for a year, and it breaks out. You see that 150 level? It's up 50% from the breakout, the before and the after. Look at the next one, Adobe. It's the exact same technical setup. It's called an ascending triangle. You see it there, a big move, a big rest, and a big breakout, right? The authority of that sort of 535 level, it's now up 25% since the breakout point. One more before and after, and let's get to Netflix. Look at Apple. Not as robust a breakout, more nascent, but it's the exact same setup. A big advance, a big rest, and then you move above prior tops. A textbook, prototypical breakout. Well, Netflix. Here's the final chart. What do we know? A big move off the pandemic low, got ahead of itself, got ahead of the market, and is now basically backing and filling for almost a year. That high that you see where the line is drawn is back in January, and we are toying with the prospects of breaking out. The bet is that it does break out. There are a few that are still left, Amazon being one, Netflix being one. Do all stocks that set up like this break out? Of course not. But you got to play the cards the way the cards are dealt. Buy for the breakout.
Carter, the fact that the stock is, quote unquote, rested for about a year, does that make the breakout prospects stronger, or the possible breakout perhaps bigger?
It does, and there are a lot of adages. The one that I learned when I was young is the more authority the level has, the more authoritative the resolution, right? And so we've been toying with the 600 level for the better part of a year. That's 12 months. That's a lot of authority, the 600 level. The breakout is likely to be authoritative, big.
All right, Carter, thanks. We'll see you on Options Action shortly. Carter Braxton Worth of Cornerstone Macro. Brian Kelly, Carter Braxton Worth is very, very, very persuasive. He's got very convincing charts. You buy into this story, though?
You know what? I do, actually, and it's for a couple different reasons. Number one, even when you saw that year-long sideways trend here in Netflix, it didn't really go down that much in a sense. It was really just kind of a flat sideways trend, which tells me that people weren't really getting out of it. They're just biding their time. You get a breakout like this in a market like this that is trading highly technical because of the retail order flow. This is the type of thing that's going to get people's attention. And I actually particularly like when something rests for a while. Carter called it authoritative. I think Louise Yamada calls it the bigger the base, the higher in space. And so this could go higher in space.
Yeah, it rhymes, so I tend to go with that one more, Bonawyn. But how are you feeling about Netflix from a fundamental standpoint?
Well, the real question,
Bonawyn, sorry.
Sorry.
No problem. So I was going to say, I tend not to fight trends. I think that's rule number one, and I'm very much in lockstep with the bigger the base, the higher in space. I do think the fundamentals present a slightly more challenging backdrop. And there's always this tug of war between ARPU and sub growth. And if you look at the last earnings release, right, anytime there's even the slightest of miss, you're going to see a little bit of volatility around the stock. Now, thematically, with the COVID Delta variant kind of rearing its head and re-emerging, I think that speaks to the stay-at-home story. And I think we've already seen the stock perform well there. But I also think the inflows recently back into tech show that people have become increasingly more comfortable with valuations here as long as they provide the earnings to support it. What I will say is that it's approaching its 52-week high and the recently raised outperform price target at Citi. So I'm not really sure how much upside is there. I do think you continue to ride the trend, but I'm slightly more cautiously optimistic on my side.
Yeah, Nadine, are you optimistic as well? cautiously optimistic.
I think there's a graveyard full of Netflix short sellers. So I think you have to be really careful betting against this one. We always hear about slowing user growth. We always hear about limited monetization. But what you've seen here is they've had pricing power, and they're coming up with a huge slate of new content. So while I wouldn't go, putting on a huge position here, our trading range is about 545 to 607. It's in a bullish formation, and there's significant option protection on this name. So I think it can go higher as people take off that protection and see some of the fundamental drivers continue to be positive.
Grasso, is the context of the markets in terms of what is in vogue sector-wise, does that matter to the story, or is this an individual story in your view? In other words, do we have to believe that we're in a sort of a slower growth environment which tends to favor big cap tech in order to believe that Netflix goes higher?
I think it's an individual story, but I think the macro does help. The low rate environment is going to help large cap tech. But to just pull it back a little bit, Carter brought up two charts, Nvidia and Netflix. If I look at the Netflix chart, I get an EKG on my screen. And what comes with an EKG? You get peaks, you get troughs, you get this bouncing around in the stock price. So I'm somewhere between Bonawyn and extremely negative on the name. So having said that, I shouldn't say that. I'm not extremely negative. I think the stock could trade down 10% and revisit its 50-day moving average. And I think that's a rising 50-day. I think that everyone would consider that a win. But that's a 10% move lower. So I would be waiting to buy Netflix 10% lower than where it is now, and that would be a great buy.
But going between Bonawyn and 10% lower seems like a big range. Would you play for that 10%? Would you play for the 10% lower, or would you play for the bounce off the 10% lower? Is the question.
Oh,
in other words, would you short to 10% lower?
Yes, I would play. I would be a seller of the stock here, and I would be a buyer of the stock 10% lower and looking for that bounce, as it's done so many times over the period that Carter looked at. First of all, the stock is only up 9% and it's already overbought. It's got an RSI of 81. Look at Nvidia. Nvidia is up 75% and is not overbought. So if I had to pick one of those charts to buy, believe it or not, I'd rather buy the stock that's up 75% and not overbought currently.
Oh, that sounds like a would you rather to me. That sounds like the perfect opportunity for a would you rather. So Brian Kelly, I'll toss it to you. Nvidia or Netflix here?
You know what? NVIDIA's been one of my favorites, so I am going to go with NVIDIA because this is a real big momentum type of market. That's not to discount Netflix. And when we talk about the fundamentals, these breakouts have a funny way of changing people's perception of fundamentals. So, I like NVIDIA better just because it has the momentum.